So guys, I have been wrong in the past, and I think that's very true for everyone. And if they can't own up to what they were wrong with, I don't think you can grow as a community. Now, I want to specifically talk about this comment. Keith Muenzer, apologize if I botched your name. Hopefully you do watch this video. He basically let me hear it. What I've been wrong about, two specific things in general that I do want to talk about. And they're two big things that a lot of people were talking about, but specifically I want to take credit for my role in this. So he says, how about a retraction video? AMC and the executive order and your wild, ridiculous price expectations for AMC. This order did absolutely nothing at all. Neither has the market crash like you stated. And we talked about the market crash essentially being a big reason for the MOAS. Really more so a couple months ago. So you've obviously been watching the channel for a long time. Thank you guys for those of you guys that have. But the market crash was never a catalyst to cause the MOAS. The market crash, and specifically we were 100% correct on that aspect that it was coming, right? We've been talking about that since 2021 times, right? Summertime, before the markets ever started to fall in November. But that was not a catalyst for the MOAS. That was a catalyst to bring out another catalyst, or a catalyst, I should say, to get margin calls. Because what are you seeing now? High interest rates. The bond yields at levels they have not been at in 10, 15 years now, right? Meaning your mortgage rates are higher, meaning your equity lines of credit are higher, meaning everything is just more expensive to get your hands on capital in equity markets. Me or you, if you're a hedge fund, if you're a bank, no matter who you are, it's more expensive. So it's harder to service margin calls. Cost to borrow rates tend to go up, and that's what we have been seeing in the markets. And say you have $1 billion of margin outstanding and you're a hedge fund. Say you also have $1 billion of, or $2 billion essentially, of money in your portfolio. So you have 50% margin. Well, let's say the markets have dropped like they have substantially over the last 6 months. Let's say you're now down 50%. Well, now you have $1 billion of equity. You have $1 billion of margin, because if you lose money, that margin debt don't go down. It's your equity values that go down. Boom, now you're at a margin call. Do you think it's easier or harder to service a margin call right now than it was over the last 6 months? The obvious answer is today it's a lot harder to service a margin call. Equity values are down dramatically. If you have not reduced your margin or got out of your margin, you are a lot closer now to seeing margin calls than you were a year ago when capital was cheap and everything was hitting new all-time highs. So when a catalyst does come out for AMC that is big, maybe they take a stake in another company, maybe something along the lines of Redbox happens. You never know what could happen with a stock. We're not fortune tellers here, we don't know, but it sets us up for prime market conditions for an extended period of time to see margin calls directly related to AMC. You don't want to have a couple week time frame where, hey, cost of borrow rates are nice, the interest rates just popped all of a sudden. You don't want that for a couple weeks. You want that for months and months. So you don't need to see a catalyst during a couple week period. You can see a catalyst in a couple month period and have the same effect. And essentially the longer it goes as well, the more so damaging it will be for hedge funds. So I do want to call that out, because I've heard a lot of people talk about the stock market crash being the catalyst, and that was never the case. And I was very clear to say that was not going to be the thing that caused the MOAS, but set us up for prime market conditions for margin calls. Now, the executive order. That's the big thing that I really want to talk about. And yes, I was 100% wrong in the sense of what effect the executive order would have on AMC, would have on the markets. Now, do I think it meant nothing? No, I don't think it was all for nothing. I don't think it's something people shouldn't have known, and I do think it will have an effect on the next rally that we see with AMC stock, and I think you will see that, and you will be able to tell a difference in the next rally, but it did not give us that initial reaction like it did the last 2 times around. We simply just did not see it. And I would really point towards what's going on in the markets, what has changed over the last essentially year, right? A lot of things are different. You can pick apart, what things probably caused what and why things happened the way they did. But I do still think that was important. But I was wrong. I did think there was going to be a lot bigger of that initial reaction that we just simply did not get, and it really came at a bad time. That Friday, the executive order went into effect. Markets were down dramatically. That next following week, markets were down dramatically. Like, there was no bullish bone in the markets at all. Nothing was going up. It was just very, very bad. So those were 2 main things I did want to acknowledge. And yes, I will acknowledge I was 100% wrong in my expectations for the days and weeks following the executive order, because executive order went into effect on June 2nd, June 3rd. It's June 18th, and we have not seen any move to the upside. AMC stock has held up very well, but we have not seen that reaction that I expected to get like we seen in January as well as in June. Now, I do still think the MOAS is coming, and it's not even the sense of I think, it's I know the MOAS is coming, and you guys can have your own opinions on this, but I think when you have a community like AMC, when you have such a popular name like AMC, everyone knows about AMC. It's different. Like, I'm just gonna pick on Redbox. I like that trade too. I think there's a lot of potential there as well, but not everyone knows about Redbox. Warren Buffett does not know what's going on with Redbox. Ray Dalio, these big names, right? They likely don't know what's going on with a stock like Redbox, but everyone has heard of GameStop, and more specifically AMC, in my personal opinion, and that has a lot of power behind it. That has a lot of potential FOMO behind it with people that have a lot of money. At the same time, when you have short interest at almost 23%, you have 117 million shares sold short, cost bar minimums at 15%, cost bar average at 19%, cost bar max at 21%, 100% utilization, days to cover at almost 4, free flow out on loan at 38%. You have lots of option activity that is very negative, but you also have a lot of very bullish option activity, specifically for July 15th. 402,000 calls that are out of the money, 10,000 that are in the money, 87,000 puts that are in the money. You're setting up for a scenario that only ends one way. It ends with hedge funds seeing margin calls with a short squeeze in AMC stock. This low liquidity regime, this market environment that we are in, is not going to change fast enough for the hedge funds to essentially avoid the carnage that will be coming to them. And in my personal opinion, given everything that we have seen, I still think the MOAS is going to happen in 2022. I think there is another big catalyst on the near-term horizon. I think there is going to be a reason for hedge funds to get out of their short positions. And if you're buying AMC right now, like, AMC is in a much different fundamental place. The business has been getting better, so that is obviously a good thing. But the market cap has been falling. So if we even go back to pre-COVID revenue numbers, you're only at a 1 price to sales. If we get the popcorn business starting, crypto business, let's not talk about crypto right now. But if we get the popcorn business going, we get the credit card business going, we get new stakes in other companies for AMC. AMC Entertainment Holdings might just become a little bit more so of a holdings company as these months do go along. If they do, hopefully take advantage of the low prices in the markets and start acquiring some stakes, that can dramatically raise the valuation of AMC and make shorts go upside down on their positions in a relatively short amount of time. So there's one way this ends. It ends with essentially the short squeeze, It ends with margin calls, and it ends with you guys making a lot of money. Even, in my opinion, if you didn't add another share to your position and you just held your position where it's at right now, I think you would be very happy with your decision, coming a couple months from now. That's it. Those are my thoughts. And yeah, I was definitely wrong. And I do apologize for anyone that really stuck their neck out on the line. You should not listen to anything directly that is said in any YouTube video as if it is facts and as if there is no other outcome. As we know, this is the most manipulated stock on the whole entire stock market, and it is the least most predictable stock in the stock market. You could have everything looking right and it goes wrong, or everything just not looking so good and the stock rallies 200%. Weird things happen with AMC. That's why we love it, and that's where the opportunity ultimately comes in. But nonetheless, thank you guys for watching. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time, link down below in the pinned comment. We have been absolutely knocking it out of the park over there, so it pays for itself over and over and over again. Thank you guys for watching. Again, enjoy your weekends, and I will see you in the next one.